Let me draw 3 buckets. There we go. 1, 2, and 3. Follow me through our 3-bucket story. These 3 buckets represent the 3 places we can put money now and for future use. The first bucket represents all the money that most advisors reference when they talk about saving and retirement. In this bucket, our clients have been told you should put your before tax money. These sub-accounts are called IRAs, 401ks, 403bs, and so on. In bucket 2, you have your funds that represent after-tax investments like brokerage accounts, CDs, savings accounts, etc. And in the third bucket, you have your freedom account. This is money you accumulate after you pay current income taxes. Back to the first bucket. All of this money you can deduct from your current taxes, and that's just fine if you will be in a lower tax bracket when you withdraw those funds. But what if you aren't? Did you know the highest tax bracket 25 years ago was 28%? Do you also know that doctors, business owners, and serious savers back then are now removing or withdrawing these funds, which they have to do because that's the law now, at a substantially higher rate now than when they put it in? Think about this. Put it away at 28% and take it out at 39.6%. Who is your advisor working for? The IRS? The second bucket works like this. Money accumulated here is not deductible going in. Taxes must be paid as earned in the bracket you are in then. And there are no forced minimum withdrawals by the government. This bucket can be more tax friendly than the first. And now on to the third bucket. This bucket is called your freedom account. You may not have one currently, however, we can, with your help, build one for you. The money you deposit in this fund is not deductible going in, but it does accumulate tax-free. You are also not restricted in the amount you can deposit by stupid government rules. And if constructed properly, the gains on this account are never taxed. Pretty cool. So in summary, money accumulated in our first bucket can be taxed at, say, 35%, meaning 35 cents on the dollar plus state and local taxes, taking this closer to 50 cents on the dollar when you take your money out. Not cool. Very confusing and not efficient. Money in bucket 2 is more predictable and tax efficient, also much less restrictive with less government restrictions. Bucket 3, your freedom account bucket, is where you can put as much in as you can afford when you can afford it. It is safe, secure, guaranteed, and when constructed properly, will never be taxed. Wow! In summary, money withdrawn from bucket number 1 is deductible going in, but when withdrawn can be taxed at a higher rate than when originally deposited, and for successful savers, most likely in a higher tax bracket. $1 million in the first bucket of retirement will yield, because of taxes at an 8% withdrawal rate, only around $50,000 per year. Not a good deal with lots of government rules and regulations. $1 million in bucket 2 is better with less restrictions, but still the same $1 million at retirement, earning 8% withdrawals would yield due to taxes around $65,000 per year. $1 million in bucket number 3, your freedom account, would yield at 8% withdrawals the full $80,000 with no taxes, federal, state, or local, and no government rules or restrictions, required minimum distributions, etc.
Whoa, wait 1 minute, Chris. We forgot to tell them what happens when you die with money in bucket number 1, bucket number 2, or your freedom account. Bucket number 2, a brokerage account, is pretty self-explanatory. But when you die with money in bucket number 1, remember, no income tax or transfer taxes, inheritance taxes even, have been paid, so your account could lose 25, 35, even 50% when it transfers to your beneficiaries. The freedom account bucket, however, your beneficiaries, your heirs, your grandchildren could receive 2, 3, 4, even 5 times the account value income tax free. So as you're planning your legacy, what you want to leave behind financially in the guaranteed freedom bucket can be designed so that you're able to use money in the other buckets effectively and efficiently throughout your lifetime.
If you could have your choice of buckets to store and withdraw your money from, which bucket would you want your money in?